All right, enough of you have asked. I've got to talk about it. We've got to address this. I've had multiple inquiries into just better understanding what the heck's going on with silver, what's going on with the metals market, what does it mean, what should we do about it. I'm going to challenge myself today. This is very unusual for me. You all know that. I have a bad capability. It's a it's like an unfortunate superpower. I could talk about things for hours on end. Uh, you don't want to hear it. So I've challenged myself. I'm going to keep this under 15 minutes. So because of that, I'm going to leave out a lot of the details. But I I want to simply just get some thoughts in front of you quickly because it matters. This is a story that needs attention. It warrants attention, and if we're not going to give it attention, we're going to do ourselves no favor. Um, if you don't know, silver has been on quite a mad rush. Since less than a year ago, it was trading pretty evenly, flat, somewhere around $30, $35. Since hell, by and large, like last, let's say August through October, it's kind of started its push. But silver has basically gone up to around 88, 89, $95, somewhere in that range. It's been trading. Um, Today's a big day. It's traded back down to 88. It had been up to, let's see here, it had intraday peak somewhere around 94. Let's call it 93.50, something like that. Um, it's come back down to 88, and there's probably a really good reason for that. Um, and that is, more broadly speaking, and this is just to kind of let's look at this as an iceberg. Here's the part that we're going to see, and then we're going to talk about some of the implications that are the iceberg underneath. The implications that we can see is that when it comes to, and this is like this is it's so simple, yet it is so hard for us to comprehend anymore because of the world that we live in anymore, that we operate in. It's as simple as, like, reach into your hip pocket if you're a guy, reach into your purse if you're a gal, pull out your wallet. Chances are you don't have a lot of cotton paper that's green in color in there. Chances are you have this plastic thing that when you go to make a transaction, you give it to them, and then they give it to you back. And yeah, psychologically, that's one of the worst possible things, because you never really register that you gave something up for the thing you got. So you wonder why people spend so much. But to avoid going on tangents, I'm not going there. The fact of the matter is we live in this digital age. It's just a fact of our world. Um, we also live in a world where we don't balance our checkbooks the same way. Excuse me, the same way we used to. Some people still do. Bless you if you do. But more often than not, we kind of rely on the bank ledger. We go and check our online account every now and then, right? That's like the average behavior. We live in this digitized world where even real things, right? If you go to your bank account and say, "Give me all the money," like, yeah, you could get it. You could get it in physical cash. You could at least feel it. Is it real? That's another question. Um, but we live in this digital world. We live in this digital world where just the same way, you're, if I were to say, like, show me your identity. What is your identity? Most people are like, what do you mean, what's my identity? It's like my physical body? Like, well, not necessarily. Like, if you go to buy a car, you buy a car with a phone, you don't need your physical body to be there, right? Your identity, more often than not, is numbers on a piece of paper. Really tough because it's become so normal. It's like, what a weird thing to think about, you know? But that is our world. That's what we're operating in. So for that reason, when we think about stocks in a company, what do you actually own when you own stock in a company? Think about what you own. All right. Now, you may have an answer floating in your head. Let me go a step further. Now, if I were to tell you, you own, let me come up with a good one. You own Procter and Gamble stock, and then you own not Apple, but Meta, Facebook stock, Meta. Okay. Now, tell me, what do you own? Now, if I'm the Procter and Gamble investor, I'm probably like, well, I at least own like a production facility, and I've got, tangibly speaking, right, factories and office spaces, and I've got the probably a boatload of chemicals that are just sitting there waiting to be manufactured into products. Heaven only knows what else they're. I mean, Procter and Gamble's such a huge company, but they probably got wax somewhere for candles. That's what they started as, so I'm sure they still make candles. But the they have a book value. But as investors, book value for those that are fundamental investors has kind of become less and less important in today's world because we have companies like Meta where it's like, what do you own when you own Meta? Well, like, what do you own? Turn the power off, walk in and feel something. What do you own? What's the physical thing you own? You don't. You really don't. Yeah, buildings, sure, whatever. Some cash piles. It's ideas. It's digital infrastructure. Yeah, they have big computational warehouses and they have data processing and data centers and that kind of thing. But the lion's share of their product is not something we can touch and feel. So for that reason, when we talk about stocks, more often than not, we are thinking of like an entity and an idea anymore. That's why we don't trade stock certificates like we used to, right? Those have become digitized and kind of ephemeral, right? So when we start to talk about commodities, by their virtue and what typically made them very boring is you touch them, you feel them, you think about them. It's a lot like real estate, even though real estate's not boring. It's become this, everybody's a real estate expert anymore. Um, but real estate, it's that's you talk to most real estate investors, they won't touch other things, which is not good for them, but not here to change your mind on it. But they like that they can touch and feel their land. The problem though is there's other, exogenous factors that affect that. We won't go there. But the fact that commodities by and large are very real things creates a bit of a conundrum because when it comes to our modern investment markets, they are addicted to creating representations of things. Right? This is the great argument against the Bitcoin or the digital currency or the crypto or the meme coin or the NFT or whatever it is. Like I just what is, that's like the let's say the plus 50 crowd is like, it's not real. It's not real. And I'm like, fine, it's not real, but neither is your dollar. And that's not me supporting Bitcoin. That's me saying, like, think about the world we operate in. It's not real. You're right. Like, I'm not arguing it. But when it comes to metal, it's real. But the investments aren't typically. Futures contracts, they're just contracts. So what's going on with silver? Okay, rewind for a minute. What is silver? Silver is a very special metal, just like gold is a very special metal. But silver is much more prevalent. It's available. It's accessible. Um, by and large, I was reading some statistics that suggest that about 70 to 75% of our silver is actually a byproduct. Most people don't know that, right? So it's not actually that we're going out mining silver. We're mining other metals like copper, and silver actually is a resultant as a byproduct of the other mining process. So because it's a byproduct, often purity is the crux, the fulcrum in pivoting the seesaw from something that's worthless to something that's worth a lot. It has to be purified and it has to be smelted into a pure form. So that's where the kind of silver's, not to say its value is actually intrinsic. Silver is a great conductor of electricity, if not the best. So that being the case, it has an industrial application. It has a utilitarian use, or utilitarian value. Gold does too, but gold is very rare. And that makes it more expensive. Silver is less rare. So while it can be expensive, the applications matter, but the purity matters as well. So last year, at the end of the year, the United States announced that they had made a huge investment in a smelting facility domestically here in the United States in cooperation with the Department of War. That's a big key into what may or may not be happening and why it matters. It's a silver smelting facility that they're building in Tennessee. Why would we be building a silver smelting facility? Well, one, we really didn't have a lot of capacity for building the silver smelting. So one could easily argue, well, if we're going to have all these data centers and if we're going to be the tech leaders in the world and everything else that is, the AI infrastructure and all this other stuff that everybody's so hyped up and jazzed about, or at least they were. Maybe they're not anymore. I don't know. Um, you need silver. Silver is a critical component. But then beyond that, why the Department of War? Right? With previously known as the Department of Defense. But the Department of War is, I think, probably a more appropriate name because it actually tells you what they're doing. Department of Defense wasn't just defending America and its allies. Uh, Come on, they've done some other things, and that's not to speak ill of any member of the military. You all are wonderful people, and I support you to the end. Just because I'm against war doesn't mean that I'm against protection and the military's capabilities. That's an important distinction to make. But the Department of Defense wasn't always just worried about defense. Okay. The Department of War, at least they're being honest about what they're doing. But why are they involved in this silver smelting facility? Well, perhaps it has an implication that the Department of War would have a vested interest in having silver. Silver is going to be critical to the future of war, right? Our electronic and technological advancements almost exclusively require great electrical conductivity. And that goes to the drones and the microchips inside the drones to everything else. But there's a deeper implication. There's a deeper thought process there. Um, the silver smelting facility is announced last year. Fast forward to this year, and while China has been a huge buyer of gold for quite a while, we've been benefiting from that. Limited supply or finite supply, increased demand by central banks, China and others, an important consideration. Very critical that we recognize that. Why are they going to gold? Well, are they backstopping their currency? It's a possibility. Maybe they want to be the ones that have the currency that everybody uses to trade in. Or maybe they don't want global trade because global trade is, in fact, breaking down very precipitously. Maybe they want to be the currency de jure or the de facto trade currency for their trading regime or their trading empire, which now becomes, is there going to be a potential for a clash of empires? Is it going to be a clash of hemispheres? Is it going to be a clash of, is it going to be a full blown cycle from what we've already experienced multiple times in historical contexts, where there is this agreement to trade amongst one another? And then when that trade starts to break down for any given reason, people start to isolate, groups start to combine, they start to ally, and then eventually something snaps and they go and they clash against one another because there are finite resources that one another wants access to. Possibility. We're not going to leave that off the table. But most significantly, right now, going back to our real and fake world, we have created so many different derivatives based on metals where the futures contracts far exceed the physical metal even available today. But then beyond that, the people who already hold the metal don't want to give it up. So that further constricts the supply. So what we ended up seeing was a new demand for silver has accelerated. Some of it might be speculative on the future need for silver. Some of it might be on the backs of big purchases calling on their silver. Imagine the Venezuela conflict pushes China out of Venezuela, and then China says, fine, you just ticked me off. I want my silver back that I have in your bank vaults. But then you're, let's say, JP Morgan, an extension of basically the US government as a bank. And they go, no, we don't want to give it up. Instead, here's what we're going to do. You gave us your paper back. We're going to give you your silver, but we're going to go get it from somewhere else. So now they're driving the global demand up for the physical metal. And then investors see that and go, wait a minute, wait a minute, wait a minute. No, no, no. I don't want another contract on silver. I actually want the silver because somebody's willing to pay me for it. And they're willing to pay me more than my contract's worth. That's what you have going on in silver right now. And more importantly, that's why today silver is down from 94, 95 down to $88 is the calls for the physical have exceeded way beyond the paper note structure and they've decoupled from one another. And that's a problem. That's a problem because the banks are responsible for this. They are the ones that create these notes, these future contracts. And then the COMEX or the Commodities Exchange is responsible for supplying the silver. And if the people actually want delivery on their notes, in other words, when their future contract expires, they bought it and they said, I bought this for the future price of silver to be, let's say, $75. And they bought it 3 months ago and it expires. And now it's, wow, look, silver's priced at 88 and that's the paper silver. What if the real market Well, maybe the real market's going for 110. In other words, I have somebody who's willing to pay me $110 an ounce for a bar, an ounce of silver. Well, now I'm like, give me my bar. I'm gonna go sell it to this guy for 120 because my futures contract was 75, whatever it was. But even on paper, it's 88. So there's a huge arbitrage differential. But that drives a price appreciation, but it also puts the banks in a really sticky situation. What are they going to do? Are they going to potentially, evoke, force majeure, which is a very dangerous game because that puts any the credibility just goes out the window. And if you don't know force majeure, it's basically can't do it. Sorry, like I can't deliver. I don't have the silver. I'll just give you some cash. I'll give you what I got. Who's going to buy from them again? Nobody. Okay. So you get this big push, but then you have to unwind what's happening right now, the cycle. And you have to step away from it and go, okay, what's going on in the paper market that's causing that price to come down? Well, the banks basically they want to reduce the price. They're trying to push the price down. They don't want to get caught holding those notes or having to deliver on those notes at that price. They want to be able to go out there and get silver. And if they're having to pay way more for it, they want to give up less, right? They're going to try and cut down the incremental marginal losses that they're going to incur. But then unwind even further beyond that. Why is silver not easy to get anymore, right? It's way more available than gold or platinum and some of these others. Well, chances are we are starting to see positioning for what could eventually become a very big conflict and clash. So China's wanting to backstop, and it may not just be China, right? It's easy to point to China because they're the powerhouse, but it may not just be China. It may be China and others wanting to backstop their own currencies and wanting to start stockpiling resources that they're going to be able to use effectively in the event of significant conflict. This is the picture for reshoring that we didn't talk about 3 years ago, 4 years ago, when we started to see supply chains are breaking down. We're going to start reshoring and we're going to start manufacturing domestically again because we can't trust global trade and da 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 da. Okay, yeah, sure. But the other part of reshoring is resource acquisition in the event of conflict. Because once you start to reshore, you start to create significant alliances regionally, and that can cause a lot of trouble, right? There's a tribal mechanism involved there. So, is war on the table? It's 100% on the table. Absolutely. Is it on the table right now? Yeah, we saw the Iran conflict kind of come up and then it sort of bubbled down. What's next? I think that we're going to see a lot of volatility this year, broadly speaking. It's just going to be a nature of this particular market that we're in. And it's not so much, it's going to be easy to blame it on this is an AI bubble. I'll talk about the AI bubble in the newsletter. You'll get that separately. Okay. Is it a bubble? Yes and no. But the most important part of this is the silver story is playing out because of AI, because of technology, because of digital world. The physical world is, cannot underestimate it. It's always there. And the idea that it's not going to be there in the future might be a very aggressive, uh, thought that you want to avoid. So I said I'd do this in 15 minutes. That's the end of this. That's the story on silver. I did it in 18 minutes. Okay. From this point forward, I'm gonna button onto the back of this. If you're done, be done watching it. I'm going to button onto the back of this, though, a couple of charts for consideration as we're looking at China that will also, I think, shed a little bit of light on maybe what's going on and why it matters. Because I've been talking about the currency war now for 3 years. This has been something I've been trying to get everybody to understand what's going on and why we're using currency hedged investments internationally, but why we're also very constructive internationally. And we want to own international and we don't want to be just domestic. Um, this is the currency war. It's happening. We're in the middle of it. This is this, and I'm talking about silver. This silver thing. This is a symptom of it. So I hope this was helpful, and stick around. I'm going to go into a couple of quick charts if you're interested. Okay, so if you decide to stick around for this, here's a couple charts that I think help tell a very interesting story about silver in general. All right, so this is silver futures, just futures contracts. Again, this is paper silver. This isn't the real metal. I'm not going to have access to data that's going to give us conclusively a good picture of what the physical metals are doing because it varies by country. Then you have exchange rates. There's a lot of factors involved. Again, that's a real economy. That's the nature of it. It's convoluted. It's wild, and it's difficult to really understand all of it. And I'm not saying that this is comprehensive. This is just important considerations to keep in mind. Um, this is silver again, kind of dating back to March of last year, and then we can see as the end of this year happened, we got this real fast run up. Um, this is October. We saw the cooling back in October, and then it's just launched from there. Okay, let's take it back and let's put it into some historical context, though. Right. So this is going all the way back here to 2011 was the last time we saw a big run up in silver. And again, I mentioned very early on, this isn't like unprecedented necessarily. There's been big run-ups in silver, but this one's, I mean, it just dwarfs everything else. Partly because the dollar's lost a lot of value, but also because of what's going on. Um, but what I think is kind of interesting about silver in the context of this particular story playing out is, you know, if I'm just assessing it from like an investor's point of view, this is a Fibonacci extension of the post uh, tariff sell off, and it affected everything. It affected metals, it affected stocks, right? Everybody freaked out about tariffs last year. And then we got the run up until October, November. And this is where a lot of the like just, I don't know, just general strife in the markets through October and November. Um, but if you were to take that and this is a Fibonacci extension of this trend, of this just a very short term trend, it actually places this going up to, and this, we could extend this further, but these are the levels of consequence. These are the levels that really matter. And we can see that this 23.6 level was in fact relevant, right? We kind of came up, we tipped across it, came back down below it, sort of found ourselves a nice little base here, and then we accelerated. And now we got into this broad range, which is a very wide range, but you can see we didn't get all the way to the top, but we knew somewhere between 86 and 71 was valid pricing, normal. These are prices we would expect it to kind of fluctuate in between and towards. And then, of course, once we broke that 86 level, that becomes a new floor of interest, let's call it like a price floor. Um, but it seems to be adhering to that intraday, right? So yesterday, today's Friday. Yesterday, we saw a big sell off, and we saw sell off into the overnight into the morning, and then it bought up through the day. Today, sold off in the morning. It's buying back up a little bit, but it's not exceeding it. But it's the important thing is that 86 is where buyers come in. 86, that's where the buyers are happy. And chances are those are the banks. Those are the banks actually buying the paper again to offset their little pickle that they got themselves into. Um, we'll see if they actually can deliver. That'll be a big indicator on their contracts. Um, but without getting into futures contracts and notional value and all the other things that go along with options and derivatives, let's go over here to this chart or combination of charts. I'm going to see if I can shrink myself a little bit here and get myself out of the way. Um, maybe that doesn't work, but let's see here. Bear with me as I try to see if I can just. I'm going to throw myself in the middle, see if this works on the video. Um, So here we are. On the left side of the screen, we've got copper and light crude. And then on the right side, we have silver and gold. And you'll see that to some degree, there's some similarities. This is going all the way back to the 90s. Well, in the case of gold, we're actually taking it all the way back to 65. But if I were to, let's say, just use the 80s, the late 80s to the present day, you can kind of see that, fairly quiet, fairly flat, some volatility, a cooling period, and then a run up. Um, but what's really important here is notice on the left side, the two with the yellow dots, light crude and copper. These are both what we would consider raw industrial metal or raw industrial commodities, excuse me. Um, there's an important event that was basically occurring between 2000 and 2004. China made it on the main stage. They went from being, let's say, a backup singer to a headliner. Um, whether it be, the WTO, the World Trade Organization involvement. Um, there's a couple of other geopolitical events that occurred, but largely speaking, this is when China came online in its modern form. Because of that, and I remember this just I was learning the world as an adult in this period of time, so it really sticks with me. As a kid and all through school, it was like everybody talked about, oh, China's going to be, and China's going to be, and then it was like China is. It went from China's going to be to China is. Um, these are the industrial commodities necessary when a massive economy like China's comes onto the main stage. They need these things. Copper, it's the cheap conductor. We use it for a lot of applications. And excuse me, copper's up here. Like crude oil, it's you may not like it, but it's the fuel that humans run on and will run on for the foreseeable future. Natural gas plays some role. Nuclear, we hope, fingers crossed, we get more of that. Anyway, that's an important thing to think about because notice on the charts over here, around the same time frame, still pretty flat, pretty boring. Commodities doing what commodities do. Sit there and be because they actually are. They exist, right? Then what happens here in 2011? Okay. 2011 forward, we got this big run up, this big spike, but that really started in 2008, right? We saw this fall off in both of these down into the bottom, October 2008. That's when the real fears of a global economy, you know, were surfacing. People weren't even afraid of 2008 until late 2008. And then all of a sudden, the banking crisis was kind of unveiled, and that's when we started to see the Lehman, collapse, and that was actually December, if I recall correctly. But point being is, people didn't even know things were getting ugly. And this is where they start really buying safety, right? And it gets bought up, but it comes back down. And in the case of silver, right? Okay, it finds a new home somewhere around $14. It had been, $7, $8. All right, so it doubled. Great. Okay, gold, right? It had been trading somewhere. I got this on the wrong. Let me put this on price. Four, $500, and then it came back down, and it was about $1,000. Right? Same idea. Doubles. But then here's COVID. Right? Here's early 20. The big buy up, the crash, inflation concerns, money printing out the wazoo. What the heck's going on? We don't know what's going to happen. Nobody really knows. And then off the charts, rocket shot. Okay. For both of these. Crude takes a fall off. Don't count on that staying. Right. That might change. Copper also ran up, but copper ran up from 228, okay, to let's say $6. All right, so it doubled and then some. Silver went from 22 to 88, right? Quadrupled. Gold, 14, 13, 14, 15, 16. All right, here's 2000 roughly. 4,500 in fact. Quadrupled. Right? These are not telling the same story. The reason for this, and the reason this matters, this is what a currency war looks like. This is what an industrial economic, not war, but commodities were playing a role in industry here. Commodities are playing a role in currency here. That's why these commodities are of the utmost importance. Whereas these remain important, this is where the story is. This is why this is evidence rather that this is part of a currency war that we're watching play out, which does in fact signal, because we've taken two of the heads and sort of put them aside for a while, that three-headed dog. The one head that is the most significant now is the dollar going to be able to uphold its role in the global economy that gives America a unique sense of power, both economically, militarily. It's a tremendous, uh, you know, benefit to the US. And is that going to be challenged to a very viable degree by counterparties, which and then in turn would be able to create a greater alliance of other nations, which could hurt us both economically and physically. And that's why this story matters. So we're going to be keeping an eye on all this. Silver matters a lot. It matters because it's showing real problems in the separation of our digital fake world, the nonsense that I just grinds my gears, even though I operate in it every day. Get back to the real world, touch grass, right? Like get your feet planted on soil, feel the sunlight or the cold air, right? Touch a piece of well-made hardwood furniture, right? Don't go buy that particle board crap. But uh, at least particle board crap is still something, right? It's physical. Don't forget we have a very physical world, and that cannot be ignored. And it's showing itself very important this year. And that's going to be a big teller of what direction we find our markets going in as the year goes on. Because, yes, the AI frenzy, the techno frenzy, it's not that it's over, it will continue, but its dominance is now going to probably be supplanted by more of a real economy. And for that reason, we need to be ready for it and we will position for it. So I hope this has been helpful. I hope the first half was helpful. This is the second half. I hope you've, found value in this as well. Um, there's a lot more we could go into. I'm not going to. I'm going to say, this is enough. But if you found this valuable, let me know. Um, I'm not gonna say like comments and stuff. I'm not looking for followers when it comes to this stuff. But if you find somebody, if you're talking with somebody and they want, you think that this is valuable to share with them, send it over to them. You know, these conversations are hard because there is way too much going on and we're covering tiny bit of it, but it's a very important piece to this puzzle. And what happens next will give us more clues as to which of the many things that are happening we should probably be focusing more on and what we should be focusing less on. So, again, I hope this is helpful. Happy Friday to you. I hope you have a great weekend. Go enjoy something real, and get outside, get some fresh air, and I'll talk to you soon.